Hello everyone, welcome you to HM Commerce Education. This is CA Hari Prasad, your accounting teacher. So today is my first lecture, so I'm very glad and I'm very happy today, living my dream to be precise. So let's get going. So to all those accounting students over there, I want to ask you some basic questions, correct? So I want to ask you some basic, very basic questions. And if you know some people who are in intermediate or in CA final already, or if you know someone who has done BCom or MCom, or you yourself, if you have done BCom, tell me these basic answers. What is an asset? What is an asset? Asset, when I say in the terms of accounting. Okay, we are discussing accounting. So what is an asset? So I ask my students, I ask my articles. I have my own CA firm here in Bangalore. Okay, when articles come up to me and I ask them, what is an asset? They will tell whatever their first PU teacher told or the second PU teacher told. Asset is property, building, some value, something it is a positive thing. These are the answers I get. So I'll give a pause. You think, tell me, what is an asset? What is a liability? What is an expense? What is an income? Correct? Do you know these things? If you know, you can comment, yes, I knew it while you were telling. Okay, I will applaud you. But for those of you who don't know, and even those students who are now in first PU and second PU or whatever you call 11th and 12th watching this video, it's very crucial and important to know these basic terms to become an accountant. Very basic terms. What is asset? What is liability? What is income? What is expense? If you know the meaning of it, then we can go to the next point and we can start learning what is journal entries, why you need to pass those journal entries, how to pass those journal entries, how to formula, how to put it into ledger. These are all the next steps. So it's like I don't even know how to swim and I want to swim in an ocean or I want to swim in a river. Is it possible? Not possible. Correct? So that is why this is basics. It's like a foundation. Let's lay this foundation so well that you guys will know everything in accounting and you will excel in this field. Okay, this video is not just for CA students or some MCom or BCom students. This is for everyone. This is everyone who wants to learn accounting. This video is for everyone. Please learn the basic terminologies, basic meaning of these terms so that it will become very easy going forward. Okay, so I asked you one question, right? Let's start with the first one. So what is an asset? Okay, so if we go to the definition, see the definition, an asset is a resource. Correct? Asset is a resource owned and controlled. I've highlighted a bit. Owned and controlled by an entity. It can be anything, a company, individual, whoever's point of view you are seeing. Okay, asset is a resource owned and controlled by an entity which is expected to generate future economic benefits inflow to the entity. You didn't understand anything, I will repeat it and I will explain it so that you get this meaning right. And after you get it, you go and boast off in front of maybe even a chartered accountant who doesn't know this. You go and tell a BCom, MCom guy and tell him what is, you ask him what is an asset. Let's see if he knows. Let's see if he tells. Correct? So asset is a resource. Now resource, property of any kind. Okay, just think property of any kind. Now owned and controlled, very important. Okay, now suppose building, is it an asset? Yeah, first PO teacher told building is asset. So yeah, it is an asset. Let's analyze why is it an asset. You have a building. You bought a building. Okay, suppose you are an individual, a businessman, and you bought a building. Now that building, you know it's an asset. Why is it an asset? We'll see with the definition. Asset is a resource. Building, owned and controlled. Do you own that building? Yes, I own that building. That building is mine. Do I control what is happening to that building? Can I paint it? Can I repair it? Can I sell it? Can I do whatever I want? Yes, I control it. Correct? I own the building. I control the building. Okay? And what is going to happen if I have this building with me in the future? The value of the building, correct? I will get it in the future. So when I say value, economic value, okay, I will get it in the future. Future economic benefits, inflow, get it. So that what can I do with this building? I can rent it out. I can sell the building. If I sell the building, I'll get some money. So this building has some value. That value we will get it because of selling it or because of renting it. Correct? So we are going to get some value from this particular item, this particular resource. So if as an entity, if you are going to get any value in the future from that particular item, that particular resource into the entity, that value into the entity, then that will qualify as an asset. You bought, for example, a computer. A computer, is it an asset or is it what else is it? We have only four things: asset, liability, income, expense. Correct? Now if you bought a computer, and because you bought a computer, maybe you are going to use the computer, generate sales, or you are using it for many other purpose. Correct? There is some economic value that you will generate using this computer. And will this computer come only for 1 month, or will it come within one accounting period? Will you exhaust this computer within 6 months or 7 months? No. Of course, you're going to use at least for 3 years. Any computer will come for 3 years. Any phone will come for 3 years. Correct? So anything, any resource which will come for a longer period, and that is in the future, you're going to get some benefits because of it. Correct? They will qualify as an asset. You can treat these items as an asset. So it is like you are spending money on something, okay, and buying something. That's something, that resource, if it is going to give you future benefits, not just 1 year, this year also it will give, now only it will give, later also it will give, for multiple years it will give, then that resource will qualify to be called as an asset. So this is the very definition. What happened? Just a minute. Yeah, this is the very definition of an asset. Now, this definition will be slightly interchanged here and there on the internet or anywhere else. Okay, so you don't have to worry. This is not some physics definition written by Newton or someone. It's not like that. Okay, this is a standard definition of an asset. So if someone asks you what is an asset, you start off by telling asset is a resource owned and controlled by an entity. Correct? Which is expected to generate future economic benefits inflow into the entity. Okay, we separate it into parts. Asset is a resource, first part. Owned and controlled, second part. Okay, owned and controlled by entity is the second part. which is expected to generate future economic benefits. That is the third part. And inflow is the fourth part. One, two, three, four. Asset is a resource owned and controlled by the entity. Correct? What will it do? Future economic benefits. Inflow. Simple. Asset is a resource owned and controlled by the entity. A resource owned and controlled by the entity. Future economic benefits. Inflow into the entity. Clear? You can take multiple examples. Let's take a car. Is car a resource? Yes, car is some property. It's a resource. Owned and controlled. Do you own that car? If you have bought that car on rent, simple. If you have bought that car on rent, let's see this definition again. Asset is a resource. Car, I bought it on rent. Car is a resource. Okay, tick. Car. Car on rent. Okay, car on rent. This is a resource. Do I own and control it? No, here I fail. I don't own and control. Of course, I will be generating some future economic benefits. Okay, but I don't own it. So it is not my asset. Correct? It's not my asset. Simple. We will stop there. We will not think too ahead. If I bought a car on rent, that car is a resource, but it is not owned and controlled, so it's not my asset. The same car, if I purchased, now let's see. If is it a resource? Yes. Is it owned and controlled? Yes. Then will it generate future economic benefits? Yes, of course, I can sell it or I can give it on hire. I can do many things with a car, right? I can use it for travel, which will in turn generate some economic benefits in the future for me. Correct? Now, that future economic benefits will come to me because I can sell it and I can get some money. I can give it on hire and get some money. Correct? So, this car becomes my asset. Building is an asset. It fits in this definition. If I own and control it, if it's mine, if that building is mine, then it fits in this definition. Then it becomes an asset. I know I'm going on and on about just asset, but I'm trying to make it very clear that asset as a meaning, it is not just something that your first PU teacher told. Asset is anything that has value. Asset is building, car, everything that the business owns is asset. No, it's not like that. Correct? So is the definition sitting in your head? Four things again. What is it? Quickly. Asset is a resource. Okay. Then owned and controlled by the entity. Correct. Then future economic benefits. Third. Fourth one is inflow. Very clear? Very, very clear. Now I give you a task. Go to all those commerce students, whoever you know, and you ask them what is asset. Okay. You should ask what is asset. Hey, you know, no, you have cleared BCom. You have done MCom. You have done some masters and all in commerce. Tell me now, what is asset? I'll bet they will stammer in front of you. You should be that person asking that question and you should make them stammer. And you tell them, see, asset is a resource owned and controlled by the entity which will generate future economic benefits into the entity, inflow into the entity. This is the definition. Got it? So, if any item in accounting, if it qualifies this definition, then we treat it as asset. Got it? Let's go further. Next. Okay. Liability. What is a liability? See this guy here? He has two question marks. Right? So, what is a liability? Now, I told you asset. Asset had four things. Now, what is a liability? See, liability is something that is a present obligation arising out of what? Past events. Present obligation means it's a duty. It's your current day's duty arising out of past events. Past events means you have done something, karma. Simple. You have done something in the past. Okay, because of that, you have to do something now. Okay. The settlement of which is expected to result in economic future economic benefits outflow from the entity. If you compare it with asset was a resource owned and controlled by the entity, which was generating future economic benefits into the entity, inflow into the entity. Correct? Now, what is liability? Liability is not a resource. Liability is an obligation. It's a duty. It's an obligation. It's a present obligation arising out of past events. So you have done something in the past. Correct? Some loan you have taken for something. Correct? So that past event is giving you some karma now, that is your present obligation. And if you satisfy this karma or you settle this, if you settle this obligation, what will happen? Correct? If you settle this obligation, future economic benefits will go out of your entity. Future economic benefits will go out of your entity. Got it? So, liability is something, it is not a resource, it's a present obligation. It's a present duty arising out of past events. And what you need to do this present obligation is a karma. What you need to do with this, you have to settle it, knock it off. How do you do it? If you do this, if you settle this obligation, your future economic benefits, some benefits that you have, will go out of the entity, outflow from the entity. Let's take examples. It will be very clear to you. Now, let's take a past example of you took a loan, a business loan to run your business. Very simple. Loan. Now, what is that past event? Taking this loan is the past event. Taking this loan is the past event. Correct? Now, what is your present obligation? Your present obligation is to clear that loan. Say you have taken this loan last year. For 1 year, you have taken the loan. So, your present obligation in this year or whenever, as on the date of the balance sheet, you have, that is your obligation to settle this loan in the future at least. Whenever you have taken the loan, you can't keep that money for yourself. If you can keep that money for yourself, that will become yours. Correct? But this money, you have to give it. It's on your head now. It's sitting like this. It's a karma, past event. You have taken this. Someday you have to give it back. Think. Someday you have to give it back. So that giving back in the future, someday, that feeling is there, no? Correct? Now, that is that obligation. You have to settle that obligation. Now, if you give back, when you give back, whatever assets you have in your organization, correct, that will go out. So, this loan is the past event, correct? Now, that is an obligation sitting on your head. Now, in the future, settlement. Now, how will you settle this? You will give some cash. Cash is economic benefit. Cash is, cash is an asset. It has economic, you can buy anything out of it. This cash will go out of the entity. Are you getting my point? Are you getting my point? So, loan was my past event. Because of that, I have an obligation to settle it. When I settle it, when I settle that loan, I will not say, okay, your loan is gone, go, bye. Can I tell that? I have to give money. I have to give my resources. Are you getting my point? When I give these resources, my benefits, my future economic benefits will outflow from the entity. Are you getting the point? So anything that has come into our business because of a past event and which is an obligation, and when you settle that obligation, if your assets or if your resources will reduce, then that will be considered as a liability as on the date of the balance sheet or as on that particular day when you are looking at it. Did you get my point? So simply, we will see if you bought a building by taking a bank loan, if you bought a building by taking a bank loan, this building, only when you see this building alone, it is a resource owned and controlled by the entity which will generate future economic benefits into the entity. So that is an asset. Building is an asset, clear. But how did you buy this building? You took a loan, correct? So this loan, what is this loan? Loan is a present obligation because of a past event. Why? What is the past event of buying this building on loan? Taking this loan for buying a building is the past event, correct? So this loan is a present obligation which I have to settle in the future, which has come because of a past event. And if I settle this, my money will go out of the entity, and hence this loan is a liability. I hope I am clear. I hope I am clear. Everyone watching, please ask yourself, did you know this before? Asset and liability. Did you think correctly about the definitions of asset and liability? Right? You can't have a vague meaning to it in your head. Asset has a meaning, liability has a meaning. Hope I am clear. Okay. After a small pause. So you might have felt I'm repeating multiple times, but see, what I'm telling is these are the basic definitions. Okay. If you don't know, it becomes very, like, it is not very difficult. Okay. In a general sense, you will get to know what is asset and what is a liability. But this is something very basic. If you know it, it becomes very clear in the future. Are you getting my point? So if you know these definitions, it becomes very, very, very clear. So you don't have to worry about it. Correct? So you don't have to, that conceptual clarity will be so high. Okay, this is why I'm doing this. Got it? So everyone, that first PU student, the 11th student, 12th student, whoever is watching this video, please get this conceptual clarity from this. Okay. So we are moving on to our third question. Correct? So what is an expense? We finished asset. We finished liability. Now, what is an expense? Okay. Any money that you spend on your business, that is expense. Is that expense? Correct? Any money that you spend, is it an expense? Just I'm asking this question to you. I'll spend some amount in my business. Is that expense? Now again, okay, going back to the same question. If you're spending money in your business, check, what is it? Is it a resource? Is it going to come for a lot of years? Is it going to give you future economic benefits for multiple years into the entity or not? No, it's not going to give me so many benefits. Then it will qualify as an expense. If it is giving you benefit only for 3 months, 1 month, 15 days, or only today, only 12 months, only 6 months, then it is not an asset. That becomes an expense. If it is giving benefits for more than 1 year, then it becomes asset. Correct? If it is giving benefit for more than 1 year, then it becomes an asset. That is what we saw in the first definition. Future economic benefits inflow into the entity, future economic inflow more than 1 year. Correct? But if it is only 1 year, then it becomes an expense. If you see the definition, an expense is the decrease in economic benefits during an accounting period in the form of outflows or depletion of assets or incurrence of liabilities. Okay, let's break it down. So, an expense is the decrease in economic benefits, correct? During an accounting period. You spent money, okay, on say electricity bill, correct? You spent cash on rent, on salaries. If you spend on salary, if you spend on rent, if you spend on electricity, with this benefit, whatever you're getting is for that particular period, and your economic benefits is reducing. What is that? Your economic benefits, that is your cash. Cash is reducing. You paid money for that rent, electricity which you used, correct? The benefit that you got is the property or the electricity or the services of your employee. Those benefits you took, correct? And you paid them some benefit, economic benefits. That is an expense is a decrease in economic benefits, decrease in the cash, the money that you have, the resources that you have, correct? During an accounting period. So if this benefit that you derived from this expenditure is for more than one accounting period, it will not come here. I will give you an example. I will give you a better example later. If it is for more than one accounting period, then it will not fit into expense definition. So the key word, ultimate word is accounting period. Correct? If this expenditure belongs to one particular accounting period only, then this will qualify as an expense. If this expenditure, if you are going to get benefits for more than 1 year, then that is not an expense. Of course, the proportionate expense I will tell you, but the entire thing will become an asset. I'll give you clear examples. Be with me. Or incurrence of liabilities. So that means I have reduced my economics benefits. That is my cash. I have spent it on salary, on rent, on electricity, water, transport, multiple things, correct? I've spent my money on this, and when I spend, my assets, that is my cash, has reduced, and or I have incurred a liability that I have not yet paid, not yet paid them. So salary, I have to pay on the 31st of every month. I didn't have money. Maybe I will pay on April 5th. On 31st March, I had to pay salary of say 1 lakh. Have I paid? No, I have not yet paid. If I had paid, I would have reduced, my depletion of asset would have happened. My depletion of my asset would have happened. But have I paid? I have not paid. I am yet to pay. I'll pay in next 4 5 days. But as on 31st March, I'll prepare balance sheet. So I will show salary is my expense and I've incurred a liability. I have not depleted my asset yet, but I have incurred a liability. I will to pay them. See how beautiful it is. I have incurred a liability. We just saw the liability definition. What is the liability definition? I am just telling salary account. I am whatever salary I am paying my employees is I have not yet paid them. So not yet paid, that not yet paid is a liability I told. Come, let's go quickly back and check whether this will fit here. What did I tell? Liability, it's a present obligation. Is it your present obligation to pay salary? Yes. They served you for 1 month, you have to pay them salary, correct? Arising out of past events, that serving, that 1 month when they served you, that is the event that took place. They have come to office for 1 full month, correct? It's your present obligation to pay them. When you pay salary, your economic benefits, that is your asset, will deplete. Outflow, economic benefits outflow from the entity. So salary payable as on the date of the balance sheet, when you have a salary payable, that salary payable will fit into the liability definition. So if you see expense definition, salary is your expense. If you have depleted your asset, okay, good. If you have not yet depleted your asset, that will sit as a liability as well. So salary will be your expense and salary payable will be your liability. Now, I hope you are understanding this. So salary is your expense for that accounting period, correct? Now, have you paid it? If you have paid, your cash would have reduced. If you have not yet paid, you would have incurred a liability to pay. We just saw that liability, that whatever that incurred a liability, that is satisfying the liability definition. Salary payable is satisfying the liability definition. Is the point clear? I hope it is. Now, what is income? Next question. Opposite, ulta. Ulta of expense. You can only make it up. You can make it up by yourself. Nothing to worry here. Correct? First, it should be ulta, but now don't tell me income is something that we will generate over multiple accounting periods. Just because I told ulta. No, no, no. Please. Income also is something that is generated in the same accounting period. But ulta in respect of other things. Will it reduce my economic benefits? No, it will increase my economic benefits. I might get cash for this. I might get other resources for this. Other than cash, I can get anything because of this. Correct? And because of income, I can create an asset. I will tell you how. See, income is the increase, not decrease, in the economic benefits of the entity during the accounting period. Very important. During the accounting period, correct? In the form of inflows or enhancement of assets. So simple income, sales. Okay, we sold some, we gave some services, we sold some goods. This is our income, revenue, correct? It is coming to us. Now, when we get this revenue will increase our economic benefits. How will it increase? It will enhance my asset. That is, increase my asset. They will give us cash for this income. When I sold goods, that sales, that particular sales word, it is income. Now, for that, what will they do? They will give me cash. That cash will increase. That cash will increase in my entity. What is cash? Cash is a resource owned and controlled by the entity, which is economic benefits and which is giving us inflow into the entity. Correct? If you have cash, you can get any economic benefit inflow into the entity. Are you getting my point? So cash is an asset. If you sold goods and if you're getting cash is getting economic benefits into the entity, which is increasing your asset. So if you do some activity in a particular accounting period, which will increase your assets, that will be your income. Sales, if you do sales, they'll give you cash, or they are going to give you cash. as on 31st March, as on 31st March, you sold goods, you gave services, you have to get some assets, that is cash, bank or cash or bank. But have you got it? No, I have not got it. Now they will sit as debtors in your books. This much you will know. They will sit as debtors in your book. We will discuss everything again in future videos also. They will sit as debtors in your books. Correct? Now, are debtors your asset? Are debtors your asset? Again, go back. Asset is a resource owned and controlled by the entity, because of which we will get future economic benefits into the entity. You don't owned and controlled means here there is a contract with the debtors that they need to pay us money. Correct? So debtors are our resource where they will give us money in the future. So future economic benefits into the entity. Are you getting it? Are you are you understanding how we are classifying debtors as asset? They are going to give us money in the future. Our debtors, because we sold goods to them as on 31st March, they are going to give us money in the future. So they are our assets. Correct? So this income is something that will increase our assets in the entity. Income is something that will increase our assets. Did you get my point? What is the other thing? It will decrease our liabilities, it will it will decrease my liability. How will it decrease, sir? Income. Okay, you told asset, I understood. Debtors will have to pay. Okay. Suppose you there was a liability towards Mr. A. Okay. You had to give him 1 lakh rupees. How did I tell it as liability, sir? Sir, without telling definition, how did you tell that 1 lakh to Mr. A is a liability? I had taken a past event, I had taken a loan from him. I had taken a loan from Mr. A of rupees 1 lakh. Now, what is the past event? 1 lakh. Taking a loan is the past event. Now, that loan of 1 lakh rupees, I have to repay to Mr. A. So, this loan from Mr. A of rupees 1 lakh is my present obligation out of past event, arising out of past event, and the settlement of which will reduce with future economic benefits outflow from the entity. Correct? So, is it satisfying? I'm taking a loan from Mr. A which I have to pay him back. Will it satisfy the definition of liability? Yes. So, this 1 lakh is a liability in my books. Now, what I did? Mr. A, okay, see, instead of paying you cash, what I'll do, I have some goods which I'm trading on a daily basis. I will give these goods to you. I will sell. Anyways, you also need these goods for your own business purpose or any other purpose. Instead of selling it to someone else, I will sell it to you. Mr. A says, okay. Now I will take my goods to Mr. A. Correct? Mr. H will take goods to Mr. A and say, Mr. A, Mr. P, please take these goods. Instead of the money that I need to pay you, instead of the asset, the cash that I need to give you, take these goods. Now, when I gave goods, what is the activity that I did in the ordinary course of business? In that particular accounting period, in the ordinary course of business, what is the activity I did? Correct? I sold goods. I did some sales, which is my income. Now, because of selling goods to Mr. A, what happened? The money that I owed to Mr. A as a liability, that is knocked off, correct? The money that I had to give Mr. A, I don't have to give him anymore, correct? So that is what is happening here. Income is something that will increase my economic benefits by increasing the assets or decreasing the liabilities. It will increase the assets or decrease the liabilities. I have gone through these definitions at snail's pace, not to bore you guys, but to make it very, 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 very clear so that it becomes very easy for you. It's very easy for me to run fast, go fast, but I wanted to make things very understandable to all of you out there. There is some people who will understand in the first snap, but there are some people who need time. Slowly they will understand. Are you getting it? Okay. So this was my basic definition lecture of what is an asset, what is a liability, what is a income, what is an expense. Correct? So what is an asset? Asset is a resource owned and controlled by the entity which is expected to generate future economic benefits inflow into the entity. Okay? Now there is, okay, you might get this doubt. Now all of you out there, okay, just think, calculator, 100 rupees calculator. Okay? What am I telling? 100 rupees calculator. Is this a resource? Yes. Is this owned and controlled by the entity? Yes. Will it give future economic benefits? 10 years it will come. Easily 10 years it will come. That Casio calculator, if you buy 10 years, it will be still working. You don't have to change the battery also. Correct? Will you get some benefit out of it? Future economic benefit, of course, small benefits. For people like me, for 1 plus 2 also, I will take calculator. Correct? I'm just kidding. Okay? So it will give you some benefit. Are we clear? But still, you will not record this 100 rupees calculator as asset. You will treat it as expense because of the concept of materiality. So if you are getting that benefit true, but can you record this 100 rupees calculator as an asset and show it in your books as an asset? Okay, I have a calculator, my balance sheet, I will put it and I will show calculator is my asset. Can you show it like that? No. Correct? So if at some, there will be some threshold. Companies Act, for example, will tell anything below 5,000 you expense it off. Don't treat it as your asset. Correct? It is just a general thing. So even it's like a guidance. If it is something less than 5,000 rupees, we expense it off and we don't treat it as an asset. Are you getting it? So what is a liability? Again, quickly, liability is a present obligation because of past events, because of which the settlement of which, if I settle this liability, the future economic benefits will go out of my entity. Correct? What is an expense? Expense is something that will decrease my economic benefits, okay, by decreasing my assets or increasing my liabilities. And this main key point is it should be within an accounting period. So if you have spent money, again, if you have spent money on buying a car, of course, if you have spent money, cash went out, assets decreased, and one more asset, be, again, before I call it an asset, I bought a car, cash went out, it is decreasing my asset, correct? Still, why will I treat that car as asset? Because it's going to give me benefits for more than 1 year. If that benefit of car is coming for only 1 year, 6 months, 7 months, then I have to expense that car off, correct? But a car will generally come for more than 1 year. So what we do, we treat it as an asset in the books, correct? So that one accounting period is very, very important. So if you've spent money on something which is not going to come for more than one accounting period, then you treat that particular thing as an expense. Clear? Then what is an income? So income is which is going to increase the economic benefits by increasing the assets or decreasing the liabilities. I gave you an example also how we will decrease the liability. Future, like we already have a loan. If that loan is knocked off because of selling goods to that person, then our sales, which is our income, will reduce our liabilities. Or if it is to a different person, he will become our debtor, and debtor has to pay us money in the future. So that debtor is an asset because he's going to give us future economic benefits inflow into the entity. Did you get my point? Did you get my point?